Good morning from London. I'm Anna Edwards alongside Tom Mackenzie. We're an hour away from the opening trade. Here's what you need to know. European leaders are set to hold an emergency meeting in Paris today on the continent's security, while Donald Trump says Ukraine's President Zelensky will take part in peace talks. Germany's Chancellor tells Bloomberg the EU is strong enough to counter US tariff threats, but he hopes for a negotiated agreement instead. This as German politics heats up heading to Sunday's election. Plus, China's president meets with business leaders, including Alibaba's Jack Ma, potentially signalling Beijing's support for the private tech sector.
OK, we check in on the markets then. European futures flat, but still close to those record highs. A little bit of softness by the end of the close on Friday, just down around 0.2%. But again, near those record highs for European stocks. We'll see if that momentum continues and we focus on defence stocks in light of what is happening around those potential peace talks. FTSE 100 futures currently flat as well. Andrew Bailey speaking later this week, and inflation data out of the UK could be consequential. Euro dollar at 104. The Japanese yen seeing some strength, currently up 0.4% versus the dollar, on stronger growth data suggesting that the BOJ has further room to go in rate hikes. The countdown to the opening trade starts right now.
We're trying to get a peace with Russia, Ukraine, and we're working very hard on it. It's a war that should have never started.
Do you expect Zelensky to be involved in these conversations? What will his role be?
I do. He will be involved, yes.
President Trump talking there about his plans to involve Ukraine's President Zelensky in the conversations about his country. And haven't things changed in just a week, Tom? Because we've gone from a situation under Biden where no decision about Ukraine was made without Ukraine. It became a common refrain in Washington to something that looked very different over the past week. But President Trump there clarifying that he does think Zelensky plays some kind of role. Does that mean at a leaders' meeting that's going to take place at the end of February? Does that mean in the preamble in Saudi Arabia as we run up to that leaders' meeting between Putin and Trump? But in the meantime, we focus on Paris and we focus on what European leaders can do. We're expecting a new plan on defence spending. Maybe we won't actually hear the details of that until after the German election, but a lot of focus on Paris and what can be achieved by European leaders.
Is this the moment where European Union, the EU, with its back to the wall, finally acts on some of these key questions? And as you say, it's the defence spending that will be crucial at a time, of course, as Macron is convening this summit in France. Not everyone is invited. The UK will be there. There's reports in the Financial Times suggesting that the Prime Minister Keir Starmer has even suggested that UK boots on the ground could be an option for the UK and could be an option for Ukraine at some point. So the nature of these security guarantees, along with the military spend, is crucial. But it's a pivotal moment, as you say, in terms of that relationship.
And it's wider than the EU, as you indicate, because the UK will be there as well. And in fact, Keir Starmer writing in this op-ed in the Telegraph that he will be willing to commit UK boots to the ground. But this really goes to the question of what role Europe is going to play here. And if Europe is going to be part of the security guarantee for Ukraine, clearly Europe thinks it deserves a seat at the table. Everything we heard from the Munich Security Conference, from the words about that from Keith Kellogg, to the incredible language that we heard from JD Vance to European ears, all of that setting us up for quite tense conversations about what role Europe should play here, it would seem.
Do they need to spend a certain amount? Do they need to raise their defence spending to closer to that 4 or 5% target that the US has suggested in order to get that seat at the table? And as you say, at what point does Europe get pulled in? And for the moment, European Union leaders, the key members, are sticking to the line that the Biden administration had, which is no talks without Ukraine's participation. But the US is going ahead with these conversations with Russia this week.
Yeah, and some of those Eastern European countries already at these lofty levels in terms of percentage of GDP committed to defence. The US isn't at those levels, but still calls on Europe to up the amount of spending, which is a conversation that's been going on for a long time, we understand. German elections, then, in this context, only a week away, less than a week away now, Tom, from the German elections. We had a four-way debate, including the AfD in this particular context last night on German television. No surprise, migration, Ukraine, the economy, all in focus. Interesting that Friedrich Merz, who is the front runner, reiterated that his party would not form any kind of alliance with the AfD. This on the back of comments from JD Vance and meetings JD Vance had in Germany, suggesting that that's where the American support would lie, of course. Olaf Scholz citing lots of undecideds, suggesting his party isn't out of the running. But, of course, we know the polling has suggested the CDU-CSU in the lead, and that remains the case.
Will Musk have any role in terms of moving the dial in terms of the polling for AfD and the result that they get? As you say, JD Vance meeting with the leader of the AfD. The question post-election on February the 23rd, of course, that is when Germans cast their vote, is what kind of coalition is formed on the back of this and whether or not it has the ability and agility to act on some of these key questions.
Yeah, and a big question is going to be defence spending and what that means for the German debt brake. And if the AfD and the left get sufficient amounts of the vote, will they have enough to block any move to increase increase flexibility in the debt brake to enable more defence spending? And if that's seen as being for Ukraine, that could be controversial for the AfD and for the left. If it's seen for being for Germany's defence, maybe that's a different conversation. But things get complicated there. And of course, we'll keep an eye then on bond markets in Europe as they open up, because there's a lot of expectation that Europe, in some fashion, will have to increase spending on defence. And so we look to the bond markets to respond to that agenda a little bit. Let's talk about China, Tom.
Yeah, indeed. And what's happening in China? In terms of geopolitics, there's also a geopolitical element to this because, of course, it's the focus on AI, it's the focus on DeepSeek, and that has accelerated the view that Chinese tech stocks can rally on the back of this. But the important meeting, of course, happened between Xi Jinping and a number of CEOs of leading tech companies, and most notably, and this was a redhead across the terminal, was Jack Ma, of course, the founder of the e-commerce giant Alibaba, who fell from grace towards the end of November 2020 after giving that fiery speech at the Bund Summit in Shanghai. Jack Ma has been revived. Just the fact that Xi Jinping is meeting with these CEOs and is meeting with the founder of DeepSeek, is meeting with Jack Ma, it's the symbolism rather than any concrete measures that come about that may be more important. Let's see if there are any concrete measures. It's the symbolism of the fact that he had these leaders in the room, that he's giving a little bit more love to the tech sector that, of course, has faced the regulatory screws tightened by his own administration in recent years. Xi Jinping knows that in order to revive growth, in order to lead on AI, he has to work with the private sector.
Yes, you do wonder how much this does represent a change of thinking in Beijing about what they want from the Chinese tech sector, what they want it to do and what they don't, because, as you say, it is a sector that has been under pressure for quite some time. So that's the China excitement. And there has been some excitement around Chinese tech stocks as a result of this, even if the overall indices over in China are not too ebullient this morning. But this Monday, we are without the United States, but that's one big stock story we can focus on.
Goldman Sachs revising up their target for the MSCI China Index, and largely on the back of some of this AI enthusiasm. Let's tell you what else is coming up on the show this Monday then. First, we're going to talk about markets with Becky Chin from Fidelity. At the Open, Eric Lonergan from Calibrate Partners, discretionary macro head, and to chat the German elections, Wolfgang Munchau, the author of Kaput, the End of the German Miracle, as we count down to those consequential German elections, of course, the vote taking place on February the 23rd.
We'll also be discussing European defence, NATO and Ukraine, all of these things coming together in a couple of really important conversations this morning. Fabrice Potier, Rasmussen Global CEO, ex of NATO, of course, so somebody who's had a seat at some of these NATO tables, and we will get his view on all we heard in Munich and what that means for Ukraine and for wider European security. We will also be hearing from Lithuania's Minister for National Defence. Lithuania, a big spender on defence, of course. Dovile Shakalainen is going to be joining us a little bit later on in the programme to talk about risks for the east of Europe. Here's what else we're watching for today, then. That emergency meeting taking place in Paris around Ukraine. US markets are closed, we know, today. We'll get lots of data out from the UK economy this week. We'll get UK labour market data. We'll get UK CPI. We get the German ZEW in between those on Wednesday. FOMC minutes will be important to keep an eye on, of course. Earnings from Airbus, Mercedes-Benz, Walmart, Alibaba, Renault. And we get a take on the global growth story on Friday with the global flash PMIs. It feels like an incredibly busy week already, Tom, with things moving really fast on the geopolitical front. But add into that some of the earnings stories that are in focus and some of the data. I was drawn to some of our reporting around the UK labour market just over the weekend, suggesting that these cracks that many had expected to see in the UK labour market because of higher minimum wage, higher national insurance, haven't appeared yet. And yes, the data is flawed. But even in some of the other readings on the labour market, we haven't necessarily seen these cracks to such a degree. So we'll certainly be watching to see if we get any clues on that. And tariffs, I'm sure, will be part of all of the earnings conversations.
And no doubt part of the conversation, potentially a question as well to the Bank of England Governor Andrew Bailey when he speaks later this week. On the UK front, of course, we had the inflation data as well. And to your point around the labour market, the assumption that they increase in national insurance contributions from companies would lead them to reduce their headcount is, and we've seen examples of it at some of the supermarkets, for example, Sainsbury's and some others, but maybe not as broad-based as had been expected. Still relatively early into the cycle in terms of how companies are adjusting to that additional cost, but we continue to monitor that as well. Markets currently pricing at around 55 basis points by the end of this year of additional cuts from the Bank of England, but we know how complex the situation is with essentially a stagflationary economy, but a relatively strong labour market. Where does that position the BOE? Tariffs potentially a future challenge as well for this UK economy.
Yeah, absolutely. Let's move on then, Tom, and get an update on some of the top stories that we are following this morning.
Smartest AI on Earth, that's what Elon Musk calls xAI's Grok 3 chatbot, which launches later today. In an ex-post, Musk wrote that the product will go live with a demonstration at 8 p.m. Pacific time. That's 4 a.m. Tuesday morning UK time. Musk says that the model was trained on synthetic data and is capable of reflecting on mistakes that it makes by going back and forth through the data to achieve a logical consistency. Meta's global policy director says the technology giant, quote, won't shy away from taking up its case with President Trump if the European Union uses its digital rules to target its products. Joel Kaplan told the Munich Security Conference it's up to the Trump administration to assess whether EU fines against US tech companies should be considered unfair, but that Meta will make its case if it feels singled out. And President Trump's top economic advisor says he'll meet regularly with Fed Chair Jerome Powell to exchange views about the US economy, giving the president a channel to convey his opinions to the central bank. White House National Economic Council Director Kevin Hassett says the plan revives a practice in place during Donald Trump's first term and won't infringe the Fed's independence. And that is the pledge then from the economic advisor to President Trump, who of course has gone back and forth in terms of his views and announcements around the Fed's most recent decisions, saying most recently they probably should have cut. The previous decision to hold, he said, was probably the right one. So he's gone back and forth, President Trump. He clearly wants to have a voice when it comes to Fed policy.
And Kevin Hassett, importantly, so he's economic advisor, and the person we're saying here is going to be meeting regularly with Jerome Powell. He thinks the president deserves to have a voice. He says, you know, he's the president of the United States. Surely people should know what he thinks on this particular subject. How much does this erode independence of the Federal Reserve? We'll see. Hassett downplaying that and suggesting this is something that happened during the first Trump administration. And we already, I mean, President Trump's going to have his say anyway. He's going to do it on social media, as we know. So whether it makes much difference, whether this message gets through to the Fed by a different means, I'm not sure. But interesting to watch. Interesting that Besant was, of course, saying just a couple of weeks ago, I lose track of time, it's all moving so fast, that actually it's the 10-year yields that Trump and he are interested in and not Fed rates. I imagine the 10-year yield feels it's quite independent right now.
It probably does. Targeting the 10-year yield on, of course, wanting to move that yield lower, and they think that the build-out of energy and in terms of what that will do to inflation will help on that matter. 447 right now, but of course, Treasury markets, Treasury's not trading in the session today. The US, of course, US markets closed for President's Day. But we know, yes, as you say, that the Treasury Secretary is more focused, he says, on the 10-year yield. Nonetheless, Donald Trump, clearly the President wants to continue to be able to have that voice over the current Fed Chair, Jay Powell. Maybe it becomes more impactful when his term runs out and the new chair is implemented.
Absolutely. Coming up, we will stay focused on what happens to European bond markets this morning with security talks ramping up. We'll check on defence stocks at the open. We'll keep an eye on world bond markets, European bond markets, to see how they respond to the expectation that we get more spending from Europe on defence. Plus, Olaf Scholz is in the hot seat. We'll hear from his interview with Bloomberg as we count down to this weekend's German elections. Up next, European bonds are under pressure as defence spending concerns grow. We'll talk about those markets. If you have questions for us, if you want to get involved in our guest conversations, please do. IB plus BBTV go. Less than a week to the German elections. This is Bloomberg. Welcome back, everybody. 7:17 here in London. Lots of news flow over the weekend, a huge amount. That doesn't mean the futures are going to do very much, or that equity markets will do very much at the market open, looking pretty flat this morning. Now, European bond markets could be in focus, though. They may come under some selling pressure today. That's a speculation that a meeting in Paris between the bloc's leaders will point towards higher defence spending plans to bolster the continent's security. Let's get more with Bloomberg's Valerie Teitel. Val, good morning.
That's right, Anna. We're seeing bond futures trade quite weak ahead of their cash open in just a few moments' time. A lot of this around the expectation that the European Union will fund this extra defense spending by issuing more debt. More supply of debt means bond prices go down, yields go higher. This has been the main mover from the weekend's events at the Munich Security Council. I want to note there hasn't been much movement, much reaction to European equities, and that could be because they have already really moved so far much this year. If we flip on, just look at my next chart, they've moved nearly 11.5 percentage points year to date. That's nearly 3 times the amount of returns from the S&P 500. So perhaps the European equity rally has already taken some steam out of it. Maybe this is not any new incremental news that will lead a European share rally further. We've also not really seen a reaction in FX space. The euro, yes, it did touch 105 overnight, but it's roughly unchanged on the day. So perhaps this is already much in the price in FX in the equity markets. Is extra EU defense spending boosting European growth, maybe boosting private sector investment? Maybe a lot of that is already in the price.
Valerie, thank you. Bloomberg's Valerie Teitel on the defence sector and what that means for the macro. Let's talk to Becky Chin, multi-asset portfolio manager at Fidelity, with us on set this morning. Becky, very nice to speak to you. So let's take a couple of the markets that Valerie was talking about there and ask ourselves what happens to them as a result of all the weekend's news flow and our shifting expectations around defence spending and what that means for Europe. So if European governments are going to have to spend more on defence, does that mean more debt? Does that mean that we're going to see higher yields either this morning or an ongoing basis for European government debt?
Yeah, I think there's definitely the likelihood that defence spending and government spending or joint issuance indeed going forward will be more than before. But I just think it's important to think that there's quite a lot of uncertainty in that assumption still. If we look back at economic fundamental, we haven't really seen that much changing over the past few months. We're still seeing, even though economic surprises have become a little bit less negative, but we're still seeing relatively mild credit growth and, PMI is still relatively weak. And so you're still looking at a European economy that is trying to recover, but not quite turned the corner yet. So inflation expectation-wise is still one that is quite contained. And so we still think with that fundamental backdrop, that needs to be taken into consideration when thinking about European bond yield. Similar to the defense talk in terms of how much growth, how much do investors should bank on the ceasefire in the Ukraine war. At the end of the day, there's quite a lot of uncertainty in the negotiation, yes. But the flow through to the economic fundamental, much of that is still dependent on, for example, gas flow, which is crucial to the core of European economy, the industrial economy, yes. As well as consumer. And that in itself carries quite a lot of uncertainty. So I think if you look at economic fundamental today, European bonds probably are still going to be relatively well behaved.
Right. OK, that's interesting, because I would have thought, I was wondering whether, yes, there's a huge amount of uncertainty over lots of the things that you referenced there, but is one of the few things we can be maybe slightly certain of that Europe will have to spend more on defence? Is that not something worth pricing into markets at this point, Becky?
Yeah, I think that is quite likely, and part of that is due to the US-European trade war negotiation as well, and defence being one of the areas that is likely to see as part of the concession. And I think we need to think of that in conjunction with the upcoming German election as well, to the extent that how much fiscal headroom Europe has, how much fiscal headroom Germany has. We need to see that bit being resolved, which takes a lot of countries to come in together to agree and see that budget headroom being released before we can definitely make that assertion.
And Becky, you talk about the German elections, and the leader of the CDU has suggested that he may be open to joint borrowing to fund defence. How would the markets react? Would the markets react to that in a relatively kind of benign fashion, or is there a market risk to joint debt to fund that spend on defence?
I think to a certain extent you're already seeing that expectation being baked into market expectation. You can see that, for example, via euro, via defence stocks. and also, I guess, via European bonds as well to a slightly lesser extent. So I think some of that has been set in motion, and we, in the portfolios that we look after, for example, we have some elements of the portfolio that are geared towards that. The defense stock exposure has been in the portfolio since mid to late last year. Part of that is baking in the possibility of trade negotiation, higher defense spending, and that will benefit not only local European stocks in the defense sector, but also overflow into the US defense stocks that have a advantage in the supply chain.
How much is priced in at that front then, in terms of that potential deal between Ukraine and Russia, or more likely Russia and the US when it comes to Ukraine? We've seen that rally in European stocks. We've seen the gains coming through for defence. How much additional upside could there be?
I think if you look at European stocks positioning, the faster moving money has, for example, flipped from a short side in the quant strategies to a long position. But if you think about the underperformance of European stocks versus the US and valuation of European stocks versus history, or to what extent is positioning extended, we've moved, but we're not yet fully priced in everything. So I think there's probably still upside. There's just quite a lot of uncertainty in this thesis.
Let me ask you about different geography, Becky, and this is one that we were talking about at the top of the programme, China and Chinese stocks. We've seen Goldman Sachs changing their view, going more positive on Chinese stocks, saying that DeepSeek has changed the narrative around Chinese tech, and that re-rates their level of optimism in China and what it can deliver. Is that something that you're leaning into, that China trade?
Yes, I think last time when we were discussing, we were talking about how light positioning was in China and how cheap the market is. And indeed, by then we were talking about it is worthwhile to position the portfolios with some exposure to this, because when the momentum turns, investor positioning turns, the move can be quite volatile. And indeed, we've seen with the DeepSeek story, for example, that started this move. You can see that in the Hang Seng Index, for example, China Index, and also China Tech indices. And then building onto that, we've seen further momentum around there is Politburo meeting coming up, for example, and so possible stimulus catalyst there. And also latest news around the Chinese government being a little bit more friendly, meeting with the private sector tech giants, Jack Ma, for example. Well, it kind of indicates that tech sector has become less of a problem, but more of a sort of a useful tool.
Yeah, part of the solution,
agent,
maybe.
Part of the solution, indeed. And finally, with recent data as well on the property sector, giving tentative sign of stabilizing and maybe turning the corner. So when you see these positive catalysts gradually add up to each other, you start to see the stock market moving quite a way, and I think that could have some leg to go.
OK, Becky Chin, thank you very much indeed. Multi-asset portfolio manager at Fidelity. Talking of China, a former Chinese company, now, of course, headquartered in Singapore, Shein, said to face pressure to lower its valuation to $30 billion US. Look, we know they are looking to list in the UK, potentially an IPO this year for Shein. And, of course, this is the e-commerce giant that has faced some controversy, of course, around supply chains and other issues.
Yeah.
They are, according to the Redhead, crossing the tongue right now, facing pressure to lower their valuation to $30 billion US.
Yeah, absolutely. And this follows reporting last week from elsewhere suggesting that the IPO might get pushed back. And all of this in the context of the clampdown on Chinese parcels, or parcels allowed to travel without higher taxation into the United States, those small parcel rules. And as a result of that, Shein's business model perhaps under threat. Coming up on the programme, we'll return to some of the geopolitical themes of the morning. US and Russian officials are set to discuss a potential Trump-Putin summit to end the war in Ukraine. We'll have reaction from European leaders next. This is Bloomberg. Welcome back. This is the opening trade. 30 minutes until we get that opening trade for European stocks. The futures picture for stocks looks pretty flat, actually, for European equity markets. We are without the United States today. It's a public holiday over in the US. Let's talk about bond markets, because there we do see plenty of action here in Europe. We see bond yields on the rise this morning. We're up by 3, 4, 5 basis points on yields this morning, as much as 6 on Italy. And actually, spreads aren't moving all that much, which does suggest that Germany is also on the rise, which it is. So we're up by 6 basis points on the German 10-year yield this morning. So quite substantial re-rating, perhaps, then, or reassessment of the risks around higher fiscal spending, higher debt levels as a result of defence ambitions.
Which ties into the details that we have around a potential meeting later this week. Senior US and Russian officials are meeting in Saudi Arabia this week to discuss that potential Trump-Putin summit to end the war in Ukraine. President Trump says Ukrainian President Volodymyr Zelensky will be involved in peace talks with Russia. Let's get more with Bloomberg's Oliver Crook, who was at the Munich Security Conference for us over the weekend. Ollie, what do we know about this Trump-Putin summit, the details?
Yeah, so listen, this is something that sort of emerged over the weekend during the Munich Security Conference about basically Trump saying even potentially that there were going to be Russian participants at the Munich Security Conference, which obviously caught a lot of the Germans by surprise, given that they said that they had issued no visas for anything along those lines. But the reality of the situation is that basically in the last week, more has happened on the conflict in Ukraine than probably has happened in the last year in terms of potential move forward towards a sort of resolution or at least discussions. We understand that now at this time, this week, there are high-level officials from the United States and the Russians that are going to begin to discuss the summit. You could have the summit happening between President Trump and President Vladimir Putin at some point, even within the month. And we should bear in mind, I mean, Trump hasn't even been president a full month, just to talk about the speed at which all of this has been developing. When you speak to the Europeans there, I mean, there's a lot of concern. I spoke to the former sort of highest diplomat for Merkel, who was a diplomat to the United States, who runs the MSC conference, who brought everybody together there, about whether or not basically Trump's approach, is it pragmatism or is it appeasement? Have a listen to what he had to say.
Trump doesn't want to be seen as a loser in a deal. And knowing Putin from many meetings, having been diplomatic advisor to Chancellor Merkel, he knows how to flatter people, but He's like children, he smells weakness. And I think what he is smelling right now is something he likes. And but then when Trump finds out that he's been taken for a ride, he may react and say, not with me.
And the concern for many European officials is that that smell of weakness is coming from many of the European capitals, and that is why, effectively, they are not really getting a seat at the table. And it's sort of been very staggering for them to watch, though it shouldn't be really, I think, too much of a surprise to see this sort of negotiation train leaving the station without them on it.
Yes, and let's talk about Europeans at the table then. How can Europeans get a seat at the table? Some of the reporting has suggested that the Americans just want to sort of question Europe as to what it wants and therefore take Europe's views into these conversations with Russia rather than let them be at the table.
Yeah, exactly. I mean, there was very much the impression that the Americans were coming to Munich to talk and not really to listen. There had been some hope that they were coming there to get some input from European leaders, but that really didn't seem to materialize. I think it has been, you know, what we've been keep hearing from European leaders is that it's been a wake-up call, right? Donald Trump is a wake-up call. We've been hearing the same thing since November, but I think now the dawning reality is everybody's sort of wishful thinking about what Trump would look like has sort of evaporated, and with every passing day, there's a reality. There's going to need to be concrete steps taken by the Europeans. They have to be less reactive. They have to start to be proactive. They need to start bringing things to the table. We also caught up with Chancellor Scholz over the weekend at the Munich Security Conference. Have a listen to what he told us about his relationship and his conversations with Donald Trump.
I spoke to President Trump very early about how to support Ukraine. My plea is that there should be first the message to Putin that Europe and the United States will continue with their support to Ukraine, because he has to understand that he cannot hope that we stop our support.
But in this sort of new world of sort of away from multilateralism and towards American unilateralism of policy, the real question is you can't just rely on the U.S. to bring you into the conversation. For these Europeans, they need to be offering something. So the question is, what can they offer? Will they go in the sort of form of more defense spending, obviously for their own protection, but also buying potentially more equipment from the United States in support of Ukraine? Then there is the other question. We heard it from Pete Hegseth, the Defense Secretary of the United States. The U.S. wants to commit 0 troops to peacekeeping forces in Ukraine after the war ends, after there is a ceasefire. Will the Europeans be willing to step up and put troops in Ukraine in order to support that? We've heard from the UK Prime Minister Keir Starmer saying that the UK is potentially on board with that. From the Germans that I have spoken to, however, over the last few weeks, there is a great reticence and reluctance to commit to anything that might look like that. I think the reality of the situation, though, is after this weekend, after the new reality of what the United States' involvement is going to be in European defense, that is a conversation that will have to come to the fore. And critically, it is one that the Germans are going to have to play a very large role in. We should say Olaf Scholz has been much more dovish about support for Ukraine, long-range missiles, these sorts of things. But the reality of the situation is he may not be chancellor after the next week, and we'll have to hear from Frederick Merz in terms of where he stands on these issues.
Oliver, thank you very much. Bloomberg's Oliver Crook joining us there with the latest on the developments at the Munich Security Conference and looking ahead to that Paris meeting and other meetings set to take place on the subject of Ukraine. Let us get the view now of Fabrice Potier, CEO of Rasmussen Global and NATO's former Director of Policy Planning. Fabrice also serves as an advisor to the Ukrainian President Volodymyr Zelensky and recently returned from a visit to Kyiv. So lots to talk about with you, Fabrice. Thank you so much for joining us. Can we start with the meeting that's taking place in Paris today? European leaders coming together, an emergency summit to talk about what they can commit to Ukraine's security. What should the priority be?
Well, first, at last, this meeting should have been long happening. We know since many months that Donald Trump is a transactionalist. He's not a transatlantist. And that if you want a seat at the table, you need to pay your seat or to put something on the table. So it is coming, sadly, late that finally the Europeans are coming together to be able to define not just the parameters of a peace deal, but also the European contributions towards peace and after peace. So I would say this is a positive, constructive step. We have to see if Macron managed to rally more than just few countries. I know that he has had very close bilateral dialogue with London on trying to put together a sort of European military coalition. But you need more than just 2 or 3 countries. You need a European critical mass.
OK. And Fabrice, help us understand how NATO works here in the sense that if European countries put together a force, even if it's not NATO branded, and it secures Ukraine, it provides security in Ukraine post any kind of ceasefire, if they were to be engaged by Russia, if they were attacked by Russia, would the US have to get involved?
Well, I think this is part of what is right now up in the air. A key trigger for European military powers to join a coalition is the reassurance that there will be a US backstop, that the US will be there in the background, maybe, but will be there in case of a major contingency. What is interesting is the U.S. Defense Secretary did not dismiss the notion of possibly the U.S. acting in the background. What he dismissed is the notion of U.S. troops on Ukrainian ground, which we knew all along. So I think this is where the Europeans need to get down to the detail, because the only way to convince Donald Trump and his administration to contribute, even indirectly, even in the background, to European military coalition is to show that there is a coalition, that there are real contribution, we are putting skin in that game.
Fabrice, how convinced are you that European leaders are going to do the spending that is needed to fill the gap that the US leaves?
Well, I think now it's no longer a question of whether, it's a question of when exactly and what a new target. I think we're heading towards 3.5% of GDP being agreed as the new 2% by the next NATO summit in The Hague. The question, however, is not so much the target, is how you execute the target. Because if you look at the last target, and I was part of the negotiating the 2%, that the first time the heads of states were agreeing to that, It took 10 years, and you still don't have all the Europeans who are hitting the 2% mark. So I think if we want to be credible about that, not just for our own self, but also for the US administration, we need to have a tighter execution plan where every 3 years we're going to define what kind of benchmarks we need to hit. If not, this is not going to be, I think, making huge difference in European defense. So we need to really go down to the detail and to execute this in shorter term and not just in 10-year horizon.
What are the odds, do you think, that the US just pulls out of NATO altogether?
Well, I think this is a bit of a hypothetical thesis, so I think it's hard to speculate about this. Clearly, there was such a threat by Donald Trump the first time he was president. They seem not to have reiterated this threat. It was quite notable that the US Vice President didn't talk about the US presence in Europe, didn't announce the withdrawal of some of the US forces. So I think we can take that as one of the things that maybe was not said in the speech that is actually quite positive. There is a form of status quo, but probably knowing the Donald Trump administration, they're waiting to see a bit if the Europeans are getting their act together. And this is why this summit today, but also, as I mentioned, agreeing on new defense spending plan, but executing them with real hard capabilities, that will make for sure a difference to make sure you don't go down this discussion.
Fabrice, always excellent analysis and context. It's not a question of if, but it's a question of when. On the road, of course, for us and taking this call. And we appreciate the analysis as ever. Fabrice Potier, CEO of Rasmussen Global and NATO's former Director of Policy Planning. Clearly a busy man as he takes that road trip across Brussels. Coming up, we're going to speak to the Lithuanian Defence Minister as Europe scrambles, of course, to establish a united front on Ukraine. So we stay on this topic, but talking to someone who is at the forefront, of course, of efforts to secure Europe in light of the pivotal weekend that has just transpired. That is coming up. This is Bloomberg.
I will meet with Russians, with only one Russian guy, with Putin, only after we will have common plan with Trump, Europe, and we will sit with Putin and stop the war. Only in this case I'm ready to meet, not in other compromises platforms.
Ukrainian President, of course, Volodymyr Zelensky there on any possible talks with Putin on the conflict in Ukraine. And Anna, of course, we heard over the weekend as well, President Trump suggesting that Zelensky would have some kind of role. We don't know exactly what role that would be in those peace talks. Something, of course, the European Union leaders and backers of Ukraine have pushed for.
Yes, absolutely. They want Ukraine at the table. They want Europe at the table if Europe is going to be guaranteeing the peace of Ukraine. But they certainly want Ukraine at the table. Will that be at a meeting between Putin and Trump presidents, of course, or will it be in a sort of background sense at other meetings? We know those meetings are taking place in Saudi Arabia between Russian and American officials to lay the stage for the leaders' meetings. OK, let's bring in a guest right now who can speak to some of these issues with great expertise. It is Dovile Shakeline, the Lithuanian Minister for National Defence. Dovile, thank you very much. Minister, thank you very much for joining us. President Macron is convening leaders in France today to talk about the European response to what we've heard from the US over the weekend at the Munich Security Conference. Will Lithuania play a role? What are the next steps that should be prioritised for Europe right now?
So first of all, Denmark is going to represent the Baltic and Nordic segment of the alliance. So physically, we're not going to be there, but in probably an hour, we're going to have a VTC meeting and align our positions. I'm going to go to the President's office, and we're going to decide what the details of the message is going to be. But the main message, of course, is not going to change. So first of all, we're not going to leave Ukraine alone, because that would be detrimental not only for Ukraine and absolute betrayal, but also it would be detrimental for the future of Europe. We all understand perfectly that what will happen in Ukraine will reflect directly not only on the next steps of Russia, but also on the next steps of China in their imperial plans, which are now successfully going along.
And Lithuania is playing its role in terms of defence spending, up to 4% this year, looking at possibly 5 to 6% of GDP being spent on defence next year. We are hearing from the Germans, the Foreign Minister, Annalena Baerbock, suggesting that there is a plan being built out in Europe now to defend and spend heavily on defence. What are the details of that? What would that look like? What are the numbers we're talking about? Are we talking about aid or are we talking about military hardware?
So, first of all, details of this plan are still in action. As we understand now, we are building the ship that we are already sailing on. But specifically, what was absolutely clear after the last 4 days in Brussels and in Munich, that first, we need to spend on defense fast and a lot. Hundreds of billions will need to be spent immediately if we really want to meet NATO capability targets as soon as possible, because as what we all understand, that Russia is not only successfully moving along with its army reform, and the size of its army has already expanded 3 times compared to February 2022, but it is even going further. But also defense industry capacity of Russia is moving faster than that of NATO Europe. And therefore, we need to invest both in our defense industry, in our military personnel, and in our infrastructure, and that needs to happen now. So the instruments most likely will be a combination of several ones. One of them will be probably borrowing, where we will need certain mechanisms that would ensure the quick flow of finances with conditions that would ensure that it would not hit our economies, that would not hit our borrowing ratings as well, but also maybe some other instruments that would be related to certain dotations, to certain aid related to acquisitions, joint acquisitions, and also development of European defense industry. Because what we also see is that we have to strengthen ourselves. And for Americans, that was the main requirement, that Europe needs to cover its own gaps when the United States is going to focus more on Indo-Pacific.
Minister, does that mean joint debt? Does joint spending on defence mean joint debt in either the Eurozone or in Europe more widely?
That I cannot answer so far, because this is now in process. This is now being decided. This is now being discussed. What we already know is that if probably less than half of the European Union was pushing for dropping Maastricht criteria in relation to defense spending. So after these 4 days, I think we are all on board that this needs to be dropped. And secondly, regarding joint European instruments, solidarity instruments like we used during pandemics or like we use for green costs, that these need to be set up immediately. Now also, I think that everybody or almost everybody is on board as well. My finance minister and my prime minister are the main people that you need to talk to about finance. My job is to ensure that
Sure. OK, so on the defence side, you mentioned that we need to be spending in Europe fast and we need to spend a lot. Some of our reporting suggests that whatever is agreed in Paris won't be announced until after the German election. Is that quick enough?
Well, since it's, a week to wait, it's not that much. But seriously,
but if the coalition takes a long time to put together, sorry, Minister, if the coalition takes a long time to put together, should German politics be able to delay the agreements that are made here?
I think that people in Germany really have no problem with sanity, and they understand what is at stake now. So even before elections are taking place, what we hear from different political sides in Germany is that they understand we need to hurry. I don't think, subjectively, my opinion, that formation of the government in Germany is going to take that long, because we all understand that this is not business as usual. So I think it's going to move pretty fast. But moreover, just before the election, before nobody knew how the new government is going to look like, they already made certain decisions, even before that shell-shocking speech of Secretary Hegseth in Brussels, that they ratified the agreement on German brigade in Lithuania, which is a big obligation, but obviously that is really important for Germany. But this realization that it's not United States who are going to be defending Europe, that it's Europe who are going to be defending ourselves with the help of United States. That is conceptually changing the security environment. And that means that we will all have to move fast, Germany included. Two statements that were already made by Boris Pistorius regarding Maastricht criteria and by Ursula von der Leyen regarding financial instruments show that, yeah, we are on the move, and it's going to fast.
OK. Minister, thank you very much for joining us. Dovile Šakalainen, thank you, the Minister for National Defence in Lithuania. We thank you very much for your time. A busy morning, of course, as she laid out. Let's get some of the stocks that are in focus this morning. Joe Easton has an update.
Morning, Anna. So we're going to be keeping an eye on the auto stocks today. That's after Trump is threatening more tariffs on the sector. Potentially these could come in April, according to latest reporting. Now, remember, this sector has seen a lot of underperformance over the past year or so, of course, given some of these concerns are potentially priced in. But there are a number of stocks to keep an eye on, including the likes of Stellantis, also Volkswagen, Valeo. A bit of a rebound in these shares over the past couple of months. Then in terms of the defence stocks, as you were discussing there with the Minister, we have got reports of potentially a boost to spending from European officials said to be working on that. And we are seeing some big gains on some of those shares on the Tradegate exchange this morning. Rheinmetall is one of them, seeing a decent jump, and also Hensoldt as well in terms of the German companies there. Then in the UK, we've got a takeover bid for Assura. This is a real estate company focused on the healthcare space. We saw a jump on Friday on speculation of this, and we've got news of the deal that has been rejected in terms of the offer. It is a 28% premium on the stock, so keep an eye on that one. Then in your ratings changes, a couple to keep an eye on, a few decent downgrades. Commerzbank is cut. That one's probably the pick for me. Keep an eye on that one in Germany.
Joe, thank you very much. Our equities reporter, Joe Easton. Futures for Europe looking pretty flat. We could see some movement higher in those defence names, as Joe mentioned. Bond yields are going higher this morning. That could have an influence on the equity trade. This is Bloomberg. Welcome back to Monday's programme, everybody. A few minutes to go then until we get the start of equity trading here in Europe. Let's remind ourselves of Friday's session. It's a long time ago. It's certainly a long time ago in geopolitics. Does it hold any clues as to where we go here in Europe? Well, perhaps not. You can see in the blue the US session of Friday. It was pretty volatile. We had a bit of data out that caught the market's attention. But in terms of what we take from that into Europe's session, well, it's not entirely clear. There's been plenty of geopolitical developments over the weekend that perhaps are on the front foot and influencing our direction. The European session of Friday had some volatility to it as well. Let's have a look at the futures picture then. We are expecting to be pretty flat in terms of these European equity markets. Could we see, though, the rising bond yield story taking the edge off European stocks? European stocks have done so well, of course, outperforming US stocks since the start of this year. Is that undermined by our concerns around security on the continent? Is that undermined by higher bond yields? That certainly seems to be part of the story this morning, and so we're certainly watching that with interest then, Tom. So not expecting a huge amount of movement in equities, but individual sectors and stocks could be on the move, Tom.
Yeah, and the defence spend, of course, is tying into some of the stocks on the move, well, at least stocks in focus for us today. So watch defence on the back of expectations. And we heard this from the Lithuanian defence minister saying Europe has to step up quickly and to a significant amount when it comes to defence spending. So look at those stocks. Autos in focus again on the tariff risk with President Trump suggesting tariffs could come in play again as soon as April the 2nd. And Assura here in the UK, it's the board of the healthcare landlord Assura rejecting a £1.56 billion takeover offer from KKR. So watch that stock as well, Anna.
Yeah, we'll certainly watch that one at the open. In terms of the overall themes then, those bond yields going higher across Europe. We'll see whether gilt yields go higher as well, because, of course, gilts will open up this hour as well. So European stocks in focus on the back of that higher bond yield story. And as we were hearing from the Lithuanian defence minister, of course, a lot of questions then about European spending on defence, about the European debt levels, around Maastricht criteria. She was mentioning that perhaps Maastricht criteria need to be suspended, says there's a lot of support for that across Europe. She was also talking about joint joint debt issuance, but of course there are different views on that subject. So we'll certainly continue to probe and get more insights on that front. In the meantime, then, European equity markets digesting all of that weekend geopolitical news flow, all of the meetings that are now set to take place between the United States and Russia and their staff members to get ready for those leadership meetings. All of those are in the agenda now, in the diaries now. And with that in mind, we see European stocks kind of treading water this morning. A little bit of an upside on the FTSE, but downside on the CAC and on the IBEX, and the DAX yet to open. We are looking for some of those defence names, of course, perhaps to continue their recent rallies on.
Across your sectors, you're seeing basic resources at the top of the list so far, at least 0.4% higher. Industrial goods also gaining around 0.4. On the downside, consumer products off by 0.5%. Personal care as a sector is down 0.5 as well. Real estate also a little softer, down 5%. 0.5%. Just looking at some of the individual standout names as the pricing continues to reflect across the session, of course. And here in the UK, worth noting as well that on the macro front, we have inflation data later this week. One of the biggest losers right now, you're looking at, for example, Baker Frost is currently down at 7%. On the upside, SAAB coming through with gains of 6%. BAE Systems on the defence side, there you go, up 4.5%. So the defence stocks, Thales also gaining 3.8%. So the defence stocks are performing well as expected on the expectation that defence spend is going to have to come through from Europe in a significant way.
Yeah, absolutely. So that lifts, and we see Safran on the list there. That list, it lifts the industrial goods and services sector. SAAB doing well, BAE, Thales and the like, all up by more than 3% this morning. Process is also one of the biggest gainers, and that takes us to one of the other stories we were talking about this morning, Tom. That's Chinese tech. They're big holders of Tencent shares. Of course, Tencent has been on the rise as a result of those meetings taking place between the Chinese leadership and big tech names. I think we've got an open on gilts as well.
We do. We've been talking about the rise in yields across the European sovereign debt space, of course, and you are now seeing yields up across the curve when it comes to UK gilts. You're seeing 6 basis point move higher in yields, currently at 4.56 on the benchmark 10-year. At the front end, the 2-year currently yielding 4.25, yields up 5 basis points. Again, we will be hearing from Andrew Bailey, the Bank of England governor, later this week, and we do get UK inflation. We'll see if that adjusts around a challenging situation, of course, for the UK, looking stagflationary. Currently, the 10-year yielding 4.56 in the UK.
OK, a lot to discuss then this morning, a lot to digest. Rising yield environment sort of setting the pace. The biggest sector downside is coming through from real estate this morning. Lots to talk about then with Eric Lonergan, head of discretionary macro at hedge fund Calibrate Partners. Eric, really nice to see you. Thanks so much for coming in. So in a macro fund, you typically generate returns from global economic trends, from shifts in geopolitics. I wonder how on earth you set a course right now, thinking about all of the uncertainty and all of the different currents that we're having to watch right now. What is your overall view of things this morning?
Well, I think you've got to be very fleet of foot in this environment, because what's happened is what's changed with policy is the range of outcomes is much, much wider than it typically is. I mean, this is a very high-risk political strategy, geopolitical strategy by the American administration. That's very, very clear. So don't be overly wedded to an opinion. Be very mindful of the fact that the sort of feedback from asset prices to beliefs is probably going to dominate. So, yeah, for an active strategy, this is very rewarding.
Right. Yes. What does that feedback mechanism look like? You say that feedback mechanism to beliefs.
Let me give you an example. I think, you're pointing out what's happening with bond yields. I think that's absolutely critical now, and I think particularly coming from the Treasury bond market. I mean, if anything, it looks like the sort of boost to animal spirits post-Trump, probably what was already happening in the U.S. economy. The labor market is maybe starting to tighten again. We saw there was a very strong, last U.S. inflation print was stronger than expected in terms of inflation. I think there's a material risk now that the Fed is going to shift direction. We could see higher yields. Higher yields are going to be the biggest challenge to this U.S. stock market. And I think perceptions, particularly in the business community on Trump, are hugely a function of what the stock market does. If the stock market starts to go down in America, political perceptions are going to change very, very quickly.
High yields will be the biggest challenge for this stock market. Of course, continues to punch through and close to record highs on the S&P. What is the yield level that creates that downside. Is there a particular level that you're looking at? When would you switch up the portfolio?
Yeah, well, I think we saw that in December. So if you look at Nasdaq 100, which is probably the kind of benchmark of what's been happening for me in terms of U.S. equities and sentiment, the peak is still the December highs, and the turnaround was really associated with yields moving towards 5%. And I think that's entirely reasonable. You know, the bond market is self-regulating in the sense if yields go up, it starts to tighten financial conditions. It affects funding, as we know. It affects the mortgage market in America. So, yeah, I think from these levels, if we see material moves in yields in the U.S., 25, 50 basis points, maybe even 75, that will definitively take an impact, have an effect on the stock market.
What assumptions are you making about the Fed at this point? Do you need to start to price in, at least around the margins, the possibility of a hike?
Oh, yeah, I'd say objectively it's symmetric here. I mean, if you think people are overly confident about estimates of R-star, nobody knows what R-star is. You discover R-star through a process of iteration. So what happens is an R-star being people's sense of sort of the medium term or the equilibrium interest rates. There is no equilibrium interest rate. It depends on what the economy is doing. And at the moment, there's no evidence that policy is tight in America. You know, it does look, if anything, that the labour market has now started to strengthen again. It looks like inflation might be picking up. That means they don't have a lot of confidence in their R-star. They'll start revising it up. And before you know it, you could be looking at 10-year yields closer to 5%. That's going to be problematic for an equity market on very elevated valuations.
OK, Eric, you've written in the past about the place where politics and economics meet. You wrote a book, Angrynomics, I know, talking about populism and economics and where they come together. You've come up with innovative ideas in the past about how you spread the benefits of growth, for example. Do you have innovative ideas for Europe right now as to how they pay for the defence spending that they need to pay for in the years ahead?
Well, I'd say, you know, this is one of the great ironies that by having now what appears to be, we don't even know if America's an ally anymore, it's certainly a very unreliable ally, this is a huge opportunity for European unity. And so I think we've all been saying for a very long time that the fiscal rules in Europe don't really make sense in the current age. We need higher borrowing for greater investment spending. We've seen that coming from Mario Draghi, who's hardly a radical on fiscal policy. And so I think that is the opportunity now for Europe, is to unify, and I think we're seeing that, and is to ease fiscal policy.
So the Maastricht rules go and the debt brake is revised in Germany?
Yeah, I mean, I think, the truth of the matter is, Germany has actually always fudged its borrowing. A lot of borrowing is effectively done off-balance sheet. If you look at KfW, which effectively is a government guarantee and provides off-balance sheet financing to the German corporate sector. So, one has to take a pinch of salt. I have enough memory to realize that Germany and France were actually the first to break the Maastricht rules, if we have long enough memories. So I think we can move here. And also, but Europe needs an excuse. My God, have we been given an excuse now. Yeah. So I think you can, from the perspective of European unity, from the perspective of a more pragmatic fiscal policy, if you look at where yields are in Europe, there's plenty of scope to ease fiscal policy. So I think that is the right move and the right direction to be headed in.
There is scope to ease fiscal policy. We've seen defence stocks then reacting to assumptions that maybe that spending will come through, with Rheinmetall, for example, Rheinmetall up 9.2%. What do you play into that defence theme, or is there already a lot priced in? Is the window closing on that? How do you think about defence stocks?
From my point of view, to be honest, that's too sort of sector specific. Right. I would tend to, about as granular I go would be to trade the DAX, So, and I think for European equities, we've already had a very, very big move now year to date. So I'm probably lightening up on those positions currently. I think the really interesting shift globally is, Anna, what you were alluding to earlier, is what's been happening in China. And I think, we're in an AI bubble. We're in an AI bubble globally. And what I really mean by that is not that AI stocks are overvalued, right? You make most money at the end of the bubble, and this is the beginning of a bubble. But I think it's spread to China now, and this is really, really interesting. I think when we look back at the relevance of DeepSeek, it's really having the effect that ChatGPT had on the Nasdaq in 23, DeepSeek has had on Chinese AI stocks. And I think that is a fundamental change in the landscape.
I mean, Goldman Sachs making that point this morning, aren't they, Tom, saying that they're improving their view on China because they think that the DeepSeek story has really changed the picture when it comes to our expectations for what tech can do in China.
It's been a wake-up call, hasn't it? I mean, look, Demis Hassabis of Google DeepMind said they've exaggerated their claims around how cheaply, or like how the cost-effectiveness of the build-out and the training of this model. But nonetheless, what it has done is change the whole narrative, to your point, Eric, around the ability and the fact that China is innovating on AI, that it is a real contender on AI, and there are potentially gains to be had there. So how do you play? And Goldman Sachs revising up their target for the MSCI China Index. Would you run with that? How do you play? It's a bubble, you say, but the upside is potentially there.
Yeah, and I need to be clear about what I mean by a bubble. What I mean by a bubble is asset prices themselves start to feed back into narratives and start to feed back into reality. Now, what's happened is we already seen that with the whole AI story, the Mag 7 in America, has changed corporate behavior globally. So corporates everywhere are now talking about their AI strategy. That's because stock prices have been going up associated with AI. That feeds back to narrative, to discussion, to behavior. And I think we've seen the same in China now, and people are suddenly alert to the fact that actually China has extraordinary technological resources. I would add to that, I think China's a beneficiary of the Trump administration so far, because what you've had is you have a hugely uncertain behavior coming out of America. When you start, if you're sitting in Europe and you look China versus America, which is more or less reliable at the moment, who knows? And so I think perceptions of the risk of owning Chinese assets is starting to shift as well.
Eric, can you see a world at all where Europe spends more in defence, spends more, including, on their own defence? We see that reflected in European defence names this morning, but also on US defence companies. And that changes views sufficiently. That's transactionally beneficial to the United States, that we then see actually some easing of these tensions across the Atlantic, because these have exploded pretty quickly.
I don't know. I think, unfortunately, they're burning bridges at a pretty fast rate. I don't think anybody feels any confidence that they're an American ally in this world. If you're Canadian, if you're Mexico, if you're Taiwan, I think it's going to take a long time to mend and change those perceptions. So it feels now it's, everyone for themselves. There are benefits to that, because I think we've all sensed that Europe has needed a galvanizing force to unify and to take action. So I think the most hope one can have is that Europe responds in that way.
OK. Eric, thank you so much for your time. We really appreciate it. Eric Lonergan, Head of Discretionary Macro at Calibrate Partners. Let's dive into some of the individual stock moves. Defence stocks certainly gaining this morning. Joe Easton has details for us. Joe?
Really incredible moves in these defence stocks this morning. I'm really quite surprised by the extent of these gains, given we saw a big rally on Friday and during last week in general. Now, take a look at Rheinmetall. That stock traded at just above 700 euros around a week or a week and a half ago. It's now close to 900 euros. There are news as well that the CEO of Rheinmetall met with Zelensky at the weekend as well, according to Zelensky's office. That potentially adding to the boost. But big moves across that sector. SAAB, Hensoldt as well, Leonardo, a lot of these stocks already trading at records and are extending those gains further this morning. So big moves over there. Then in terms of process now, we did see that move higher in Tencent overnight. That seems to be related to excitement around one of their apps collaborating with DeepSeek, and we saw Tencent moving higher. Process has that very complicated relationship with Tencent that I still haven't figured out quite, but it is boosting process according to the analysts today. Then in terms of autos, this one looking a bit weaker in terms of the sectors. Trump, of course, warning of potentially more tariffs coming through. Potentially in April we might see that, and we are seeing a little bit of underperformance, quite clear underperformance in some of them, including Valeo down around 0.5%. Continental as well slipping. Then in the UK, another takeover coming through, or at least an attempted takeover of Assura. This is a company that owns properties, uses GP practices in the UK, doctors' surgeries. Now, they have rejected the bid, saying that it undervalues them. It is around a 28% premium, not quite coming up to that level at the moment, but we're up 18%. Decent return. There was a bit of speculation on that one. Somebody knew something was afoot on Friday. Then in terms of the ratings, Commerzbank downgraded. Now remember, UniCredit is looking at the company, of course, and the stock price has rallied. So analysts over at KBW cutting their rating, saying they no longer see any upside on that one. And then finally in healthcare, GN Store Nord, one of the worst performers in European pharma today, is HSBC downgrades. Those weak margins at the hearing aid maker in their last report a couple of weeks ago. And that is the region. HSBC cuts GN today. That one is down 1.8% in Copenhagen. OK, Joe Easton from our equity team. Thank you very much indeed on some of the stocks on the move this Monday. Coming up, European leaders regroup in Paris.
to discuss a defence spending revamp. You can see the rally in defence stocks in Europe on expectations that more spending will be coming through. We dig deeper into those defence stocks next. This is Bloomberg.
Welcome back. This is the opening trade, 18 minutes into Monday, the 17th of February's opening trade. And this is the picture for European stocks. The Stock 600 up by 0.2%. The German DAX up by 0.25%. We have defence names certainly going higher this morning, whether that's in Germany or more broadly. We can see, there we go, German defence stocks on the rise. That's adding to some of the upside that we see over on the German market. Let's get to Bloomberg's Oliver Crook, who's tracking, of course, all the news flow from the Munich Security Conference and the way we're setting up for these meetings around Ukraine now in Europe and beyond. What more can you tell us then, Oliver, about how defence stocks are performing this morning? Feed that into the broader geopolitical narrative for us.
Yeah, listen, Anna, we should say that they already caught, a number of them caught a pretty healthy bid on Friday, and that's just being basically sort of expanded into today's trading. I mean, you look at the biggest performers in Europe right now, it's Rheinmetall, it's SAAB, it's BAE, it's Leonardo, it's Dassault, Thales, Kongsberg, all of these companies getting a sort of bid, because in all the sort of ambiguity that we're getting from some parts of, Trump foreign policy, the one thing that seems to be clear, apart from, the thing we keep hearing, the wake-up call for Europe, what that is certainly going to mean is going to mean more defense spending within Europe. And these Europeans who have a growing consciousness that that money wants to be spent not just on U.S. kit, but also on European kit. And we should say it's a sector that's also very well integrated. When you build an F-35, you're buying Joint Strike Missile systems. Those come from Kongsberg. So all of these things get bid up really at the same time. So these are some of the companies and the CEOs we've been speaking to at the Munich Security Conference. I spoke to the CEO of Kongsberg Defense and Aerospace, basically about what the next step is for them and how they need to position themselves into this rally. Have a listen to what he had to say.
One is the scale up for production. That's important. We are doing that. The other one is innovation. We need to, adapt to new situations all the time. So that's a key area for Kongsberg, is to build up this innovation, especially around autonomous operation, artificial intelligence, and associated areas with that.
So there's the question of innovation in terms of sort of anticipating what this market is going to need in terms of demand for different products as the nature of warfare sort of expands and evolves. But the other one is the key one, Anna, and that is the question of scale. The order books are absolutely packed. That's good for the defense companies. It is not so good for the clients. So they really need to ship up their sort of the scale up their production if they're actually going to be able to deliver all of this stuff in a timely fashion.
Ollie, I know consolidation in defence, at least, has been one of the key topics at the Munich Security Conference, which, of course, you've been covering. I'm just looking at one example. Europe has 17 different types of battle tank. 17. The US has one. That makes, of course, it incredibly complicated to integrate military systems on the battlefield. Talk to us about what consolidation is likely to look like.
Absolutely, Tom. And this is one of the sort of key parts of the Mario Draghi report. That's exactly the point that he makes. There's so many of these different battle tanks across Europe. They're not well integrated. There's a question about sort of armies being able to work with one another. But then again, of course, Tom, there's the question of joint procurement. Can we start to get joint procurement across European countries who need similar kinds of kit and can then maybe get them at larger scale, gives more predictability to the sector, gives more sort of pricing power to the states. And this is sort of a virtuous cycle for expanding the defense industry. The question is about how consolidation will actually happen, because very seldom do things happen so much money floods into a sector and the sort of nature of the sector doesn't change. So I spoke to the SAAB CEO about how he sees that happening here in Europe. Have a listen to him.
Continue to incentivize sort of companies to work together. If you find a couple or three countries working together, you find defense forces needed the same things, and then you will see industries coming together to work as well. That will lead to joint ventures, that will lead eventually to consolidation. You have to do it that way, I think, then, rather than trying to sort of top-down decide who will do what in Europe. That won't be possible, I think.
So a sort of bottom-up approach in terms of the defense sector of how this sort of consolidation will come into being. But again, there needs to be that sort of enthusiasm into it. I think what's also interesting, you talk to these CEOs about kind of where they're looking at expanding their footprint. A lot of them have either joint activity going on in Ukraine or in other countries. And I think that we also think about the difficulties of the German economy. We think about these sort of commercial industrial applications like the chemical sector. We think about the auto sector. All of these things are having a really hard time. Could Germany, for example, become a hub for the military industrial sector? This is a sort of an idea that is becoming more and more attractive to a number of companies and politicians in Germany looking for the sort of next catalyst for growth.
Yeah, and as you say, the likes of Rheinmetall and SAAB rallying possibly on expectations that that could become a reality. Bloomberg's Oliver Crook with all the details, of course, on how Europe is rethinking its defence sector and response. Ollie, thank you. Now, switching focus to some of the changes we're seeing amongst the hedge funds and their positioning. Famed investor Michael Burry rolled back on some of his investments in Chinese tech stocks at the end of last year. That's according to 13F regulatory filings that came out on Friday. The move came just before DeepSeek's breakthrough in AI reignited a $1.3 trillion rally in the country's shares. So arguably unfortunate timing for Michael Burry. Let's get more from Bloomberg's Jenny Serene, who's been pouring through the details for us. Talk to us about how you read into Michael Burry's positioning. Was he caught short on this, or has it paid off already, the fact that he's been early on the tech story in China?
So, yes, so he's absolutely been early, and obviously towards the end of last year, it does seem like he trimmed back some of his bets. But I think it's still important to note that China remains one of his biggest holdings across the fund. And while he did trim, I think it was Alibaba and some of the other e-commerce companies there, he increased his bets on Baidu and some of the other Chinese stocks. So I don't think he was calling it quits on China just yet. So I imagine in just a few months when we get this quarter's 13F filings, he'll probably still be sitting quite pretty. But yeah, I mean, he's of big short fame, so we like to watch what he's doing and what he's saying. And the fact that he did pull back ever so slightly probably indicated a little bit of wariness on his part.
Okay, so that's his strategy and what he's doing on China. Let's talk about what Warren Buffett and what we learned from 13Fs about his strategy. He's continued to trim his stakes in Bank of America and Citigroup. Now, of course, part of the Trump trade was strengthen the banking sector around M&A and higher yields. So what do we think that Warren Buffett is seeing here?
Yeah, it's super interesting because he's been whittling away the Bank of America stake actually for the better part of last year. And I think, banks had a really stellar year last year. I was looking at the KBW Bank Index before I came on, and I think it was up some 40% over the last 12 months. So it could just be that he's ready to take those gains and has, thinks that rally has kind of gone as far as it will go. But there's a lot of stuff that could weigh on these bank shares in the next few months. So you've got the Fed, obviously, almighty Fed, all this geopolitics, the upending of global trade. If these tariffs do come through and really, threaten to derail any major trade corridors, that would be very bad news for especially a bank like Citibank. So I think that's what you're probably seeing a little bit up there. But yeah, it'll be interesting to see how he does this year.
Yeah, so it's interesting to see how that plays out in the European banking space. Just this morning then, Jenny, we see banks as the best performing sector on the back of the higher yield environment that we're seeing, 5-6 basis points up on 10-year yields across European markets. I mean, this impacts their net interest margin, obviously, so it's quite a direct read across.
Yeah, no, I think that's exactly right. And I think the kind of follow-on thing that I'm always really curious about is, with these higher stock prices, with this better currency as it would, will we continue to see more of this M&A play out that we've seen so much of these past few months? I think that's like where my mind always goes to when you see European bank stocks doing so well.
Okay, and certainly the Italian M&A story comes to mind, and we'll pick up on that conversation in the next hour of programming. Jenny, thank you very much. Bloomberg's Jenny Serene with the latest on what's going on in the banking sector here and over in the US and the hedge funds and what they're doing. Coming up on this programme, more from our exclusive interview with Chancellor Scholz, who says that Europe is strong enough to react to US tariffs. He would prefer some sort of negotiated solution to avoid a trade war, but he does say that Europe is ready to respond on tariffs. We'll get back to that agenda shortly. This is Bloomberg.
Welcome back. This is the opening trade. We are 30 minutes into today's session. You're seeing modest gains of around 0.2% on European stocks. Banks as a sector performing very well, as are defence stocks as well, on expectations there'll be more spending coming through in light of the US walking away seemingly from European defence. This is a breakdown of what you're seeing across the DAX. The CAC 40, of course, in France, a little softer so far in France. The DAX is performing well, up 0.2%, and the FTSE 100 here in the UK currently up just 8 points at 8,740. Now, Germany's Chancellor says the European Union is strong enough to stand up to President Trump's tariff threats. But in an exclusive interview, Olaf Scholz told us the EU is open to talks to avoid an all-out trade war.
First, I have to admit that I'm in favor of free trade. I think this is a big advantage we have in the world, and that many of the wealth and the growth we have in the world is because of free trade. So it must be fair free trade, yes, but free trade is better than tariffs and protectionism. I don't think that this will work.
So it should lower tariffs?
When it comes to the European Union, I think everyone knows that we are a big economic area with a lot of strength, where policy about tariffs is something that is our common policy. So we are strong enough to react to everything that is harming European economy. But we should react always, but in a way that is always offering the chance for an agreement, because it's better for all parties involved, especially on both sides of the Atlantic.
But is the European Union considering cutting tariffs before any announcement on cars?
We invite the United States to discuss with the responsible authorities about what we can do for a better progress that serves all of us. There is a willingness. And so I'm sure it's better if we agree to something that helps all of us. And it is good to know that Europe is strong enough to act and to react.
You talk about it being a common project, but Donald Trump has made clear that he wants to do reciprocal tariffs. He doesn't want a WTO approach where all the rules are on the same countries. And even with the European Union, he might want to have a different tariff regime for France and Italy and Germany. What would you do then?
The European Union is a unified economy and has...
but there's nothing to stop the US doing that.
But it has common tariffs, and we act together, and we will stick together, which I think is also important. And so I'm quite confident that a good solution is feasible, and everyone should work to make it happen.
You spoke this morning very clearly about what you need to do to increase defence spending above 2% of GDP, and suspending the debt brake just for that additional defence spending. But for many countries, it will want to also have joint debt issuance for Europe as a whole to be able to invest enough in defence. Would you consider that, given everything that's happened in the last few weeks?
I think there are three things we can do in this very moment. The first is that we agree in Germany that supporting Ukraine is something of an extra effort. So we should have extra room for maneuver, also financing this support to Ukraine, which, when it comes to the figures, Germany is doing the most. We are the biggest supporter of Ukraine in Europe, the second biggest in the world, and this has to continue, but we cannot pay for it with cuttings in pension schemes or in the health sector, or in cuttings in the investment into streets and railways and so on. So I think it's clear that we have to do this. And the second is that we have to agree how we will continue with the spending of more than 2% of our GDP for defense, which we achieved because of an extra fund which I managed to get through the parliament. But for the future we need a new decision about this, and this is for continuing with this 2% plus already 30 billion a year. So also this will not work with tax increases or cuttings and spending in the different areas of the German budget. And when it comes to do more, which will be obviously necessary when we look at what NATO is discussing, then it especially means that we do something for these activities, which gives us in Germany the opportunity to spend even more, and this has also to do with the reform of the debt regulation in Germany. When it comes to Europe, I think we should help every country, if it spends more than 2%, to be not hindered by the European regulation on treating debt.
So changing the stability.
We have to change these agreements so that this is feasible for a country to do.
Okay, Germany's Olaf Scholz, Chancellor, of course, speaking there to Bloomberg. Germany's economic decline has been, of course, a hot topic as we eye job cuts at some of the country's biggest firms. In his book, Kaput, The End of the German Miracle, Wolfgang Munchau argues that the weaknesses in Germany's economy have, in fact, been brewing for decades. Wolfgang, who's also director at Euro-Intelligence, joins us now. Wolfgang, before we get the details around your book and what it tells us about the industrial base of Germany and the political overlay, I do want to get your view on whether or not you think whoever wins on February 23rd, whatever the coalition looks like in Germany, if we do get a coalition, that this is a German political body that is now more open to joint borrowing to fund defence. Is that where things are now?
I would say the answer is yes, but I would not raise my hopes too high on this regard. I think you just heard Olaf Scholz talking about openness in the German debt brake. He talked about opening the European Stability Pact. These are the two frameworks through which member states can fund themselves. He has not mentioned European debt. Now, there is I think it will also happen that I can imagine that there would be, because the funding requirements for defense are so significant that a European program is feasible. I would, however, not think it's going to be it's going to be very, very large. Most of the heavy lifting for defense spending will still have to come from national budgets.
What is your expectation then, Wolfgang, of likely outcomes when it comes to this election and the priorities that the new government should put on the table?
Yeah. This election is extraordinarily difficult to call because it doesn't actually depend. The outcome doesn't so much depend on how the main parties, like Scholz's party and the CDU led by Friedrich Merz, which is in the lead. It doesn't so much matter how they perform. What really matters are three small parties that are on the verge of 5%, which is the representation threshold for the German parliament. If they are all in, all of the three are in. This is the left party, there's two left parties and a liberal party. If they're all in, it will become extraordinarily difficult for Friedrich Merz to form a coalition. He may need two coalition partners. He may need to form a coalition with both the SPD and the Greens. If they're all out, it will be very easy for Merz to form a coalition. He can just form a coalition with whomever he chooses between the SPD or the Greens. You can choose one of them. If one or two of them are in, the situation would be sort of in between those two scenarios. So I will expect at least one of the current government parties, Scholz's party, Scholz's SPD, or the Greens, to be a member of the next government. That's pretty sure, because Merz has clearly ruled out a coalition with the Alternative for Germany, the party of the far right. The intervention by JD Vance at the Munich Security Conference, where he actually called on Germany to drop, or called on Merz in particular, to drop the firewall, the political firewall against the AfD, it had actually the opposite effect. It pushed Merz further to the center. So it's going to be a coalition of Merz and at least one of the parties of the left. And that will constrain the policy choices that are going ahead. So I don't see, I see some changes on the way, but it's going to be a more gradual change.
And you mentioned that there could be three parties of the left that might or might not, or three smaller parties, that might or might not make it into the Bundestag, Wolfgang. If they do, then, do we say that it's more likely we don't get any change in the debt brake in Germany? Because as I understand it, some of those parties, they don't want to see any change in the debt brake, especially if it would be to fund something that was not for Germany.
Yeah, the debt brake requires a constitutional change if you wanted to make any modifications, and a constitutional change requires a 2/3 majority. So it would have to be, the government would have to seek allies beyond its immediate partners. Now, of the three parties, the FDP, which was a coalition partner in Olaf Scholz's coalition, but left last November, they are opposed to reforms of the debt brake, and so is the AfD. And if you do the maths, the AfD has 22%, the FDP, if they get in, they will have at least 5%. So that's not exactly a third, but it depends who else is in and who else is out. It could actually constitute a blocking minority.
And in terms of forming that coalition in the first place, then, Wolfgang, we spoke to the Lithuanian defence minister just half an hour ago or so on this programme, and she was making the point that there's such an urgency. Europe is building a boat that it's already sailing on, was the phraseology she used to describe the urgency with which we need solutions on more defence spending in Europe. And she thinks, as a result, we might see a German coalition formed more quickly than previously we might have expected. Is this the kind of motivating factor that will get to a German coalition more quickly?
It surely is the emergency that you're referring to is surely a factor. If it is a two-party coalition, it can actually happen fairly quickly. There is always the possibility, when it comes to an emergency funding, for the Bundestag to declare with a simple majority vote to declare a state of emergency. That's something they can do. They don't need a 2/3 majority for this. It's not a clean solution, but if it is a majority or an emergency issue, say in defense, funding for Ukraine, they could do this if they wanted to. The debt brake reform is more about the long-term shifts in spending, what Scholz was talking about, the 30 billion a year they need to get to the 2% NATO defense spending target, which they will need from next year. So this will require more sort of structural reforms in the thing, and this will require real majorities, and those majorities might simply not be there. But they can certainly get over this need, for example, at the Paris conference today, if they agree to increase defense spending immediately, I think they can do this.
Wolfgang, you chart, of course, in your book the challenges over a long period for this German economy and the political lack of foresight, arguably, that has held this German economy back. There's an assumption among some investors, once you get this election over and done with, you will have political certainty in Germany and you may get additional fiscal inputs, not just from defence but more broadly. Is that a fair assumption?
No, it is not. I'm hearing some of these wild hopes that Germany would with these elections solve its problems. Merz has some good ideas, but he will not be, and he has not prioritized those good ideas in the election campaign. He focused on migration, he focused on housing and various other issues, but not on reforming the economy, because what the steps that are needed would be very hard to do with the current coalition partners. So I don't see that happening. As far as the fiscal expansion is concerned, a debt brake reform is not a debt brake abolition. A debt brake reform is the recognition that certain investments can be exempted from the debt brake. This is the introduction of the so-called golden rule. On my calculation, this is between 0.5% and 1% of GDP, the net effect of that. Probably at the lower end of this rather than the higher end of this. And a relatively large part of that will happen at local level rather than at federal level. So the idea that this will give us, a fiscal boost or a massive fiscal expansion that would fundamentally alter the equations for investors, I think is too optimistic.
Wolfgang, the conversation on so many fronts must be changing and evolving very quickly in Germany, culturally as well. We were hearing from our correspondent earlier about the role of the defence sector. Defence shares are really on the rise, and that includes in Germany in recent days and weeks. On expectations, perhaps, that defence becomes a bigger part of the German industrial complex. Is that a complicated conversation that is happening in Germany right now, or does the direction seem clear?
Well, it's a complicated conversation, that's for sure. But it offers defense offers a way out for the German industrial model. In my book, I write that the model, has a lot of difficulties and it has no future. I'm not saying that industry, there's no sort of space for industry. I think the space for industry is smaller than it was in the past, and defense could take up some of the slack. We should just not be, overestimating how much of it. I mean, Rheinmetall has done extraordinarily well, and his chairman said, 5 years ago, no one would ever talk to him in Germany. He was not sort of, people wouldn't invite him. This was not a company that people were comfortable with. Now, his company is booming, his share price is rising. And Europe is really relying on his production capacities to produce ammunition for Ukraine. So yes, there will be. Germany does have that capacity, does have strong industrial capacity, which is needed, for example, in a war. We just have to remember that the most likely scenario, as this coalition is formed, certainly in my view, is that the Trump initiative to secure peace in Ukraine is more likely to succeed than to fail, because the Europeans have no alternative strategy to offer here, and certainly no defense capabilities to offer in the short run. So we're talking about the long run. So we're talking about an increase in defense spending, maybe to 2% for everybody. And that will involve definitely more defense industrial capacity.
Wolfgang, thank you so much for your time. We appreciate it. Wolfgang Munchau, author of Kaput, The End of the German Miracle, and director of Euro Intelligence. We'll bring you all of the news, analysis and market moves as we continue to build up to the German election. Of course, it's taking place in less than a week, including a special programme when polls close on February 23rd, live from Berlin. Up next, European bonds are under pressure as defence spending concerns grow. We see yields on the rise. We'll talk markets next. This is Bloomberg.
The first thing for investors to do is to understand what is the full potential adverse impact of tariffs if they're implemented.
We have higher prices and lower growth because everything's going to be more expensive. And also the tariffs are going to disrupt supply chains. So that's also going to lower productivity growth.
We've seen that when tariffs were announced on Canada and Mexico. They were preparing retaliatory tariffs. I think it's very unrealistic that other trading partners will just sit by as the U.S. puts tariffs on them.
What is his plan? I think it's very confusing for our trade partners not to know what it is that he wants.
The good news is the markets do sort of get a little desensitized to it. I think people realize that Donald Trump is a very unusual president.
Okay, guests across Bloomberg Television weighing in on the impact of tariffs. And, of course, the complexity and the lack of certainty is still there. President Trump suggesting the additional tariffs may come in as soon as April the 1st or April the 2nd. Clearly, one consensus view is this is a very transactional president, and that is something that markets are starting to understand. I thought it was interesting. One Singaporean minister framed it this way, saying the US is acting like a rent-seeking landlord. And that's the way to think about how the US interacts with friends, allies, and adversaries as well. Yeah, that's a very interesting description of what's happening here. And you wonder to what extent the tariff and the defence themes are linked then, with that in mind. Because, yes, if America is annoyed that it's had to secure the defence of other regions, other geographies for a very long time, what does it want in return? Maybe it wants spending on its own defence business. It wants Europeans to spend on US defence companies. It wants Europe to buy more gas. And, of course, all of that will help to address the trade imbalances that also anger the White House. So these themes do all seem to be linked in the Trump view of the world. It's not about policy or priorities. It's about the dollar, and it's about money and it's about those transactions. And if they feel like they're being short done, it's not about principle, as it may have been in the past. It is about whether or not the US feels it's being ripped off, quote unquote, ripped off in the view and in the articulation of the Trump administration.
Let's talk about what we see on the markets right now then, Tom. We see European bond yields are on the rise. So this is the defence theme rippling through markets. We heard a lot at the Munich Security Conference about how European countries are going to have to spend more on their own defence. And so as a result, we see European yields going higher. That then has an impact on stocks. Banks are higher. Industrial goods and services, which includes the defence stocks, are higher. Real estate, of course, the weaker end of that. And this is just Monday. We've got a lot happening this week.
Yes, there's a lot. There's more happening today, and there's more, of course, a lot more happening throughout the week. So here's what else to watch for this Monday, and then we'll move on through the week then. Emergency Ukraine talks taking place, of course, in Paris, hosted by Emmanuel Macron, the president. The UK will play a part. That is happening today. US markets closed, of course, today. And in terms of what's happening on the labour market data, we get that on Tuesday out of the UK. Germany's ZEW survey comes through on Wednesday, so another important gauge on the health of the German economy before those elections, of course, on Sunday. Then we get inflation data out of the UK. That could be important in terms of how we're thinking about pricing around the Bank of England. Currently, markets pricing an additional 55 basis points or so by the end of the year from the BOE. And we get the FOMC minutes as well on Wednesday. Then on Thursday, on the earnings front, you get Airbus, Mercedes-Benz, Walmart, Alibaba, Renault, some really big names in terms of the earnings story. Alibaba going to be particularly important, of course, particularly interesting, given that some of its foundation models have proved to be as competent as some of its US competitors. We'll see if that's paying dividends in terms of the other units within the Alibaba ecosystem, whether their spend on AI is actually leading to return on investment for that business as well. There's a lot of excitement about that.
And AI in China does seem to be something that has caught the market's attention in recent sessions, doesn't it, Tom? We've seen Goldman Sachs upgrading their expectations on Chinese stocks as a result. DeepSeek, of course, the name of the moment when it comes to Chinese stocks. So we'll keep an eye on that. Joining us now for a conversation about these wider markets, Bloomberg Executive Editor for Asia Markets, Paul Dobson. Paul, let's put some of the seemingly disconnected things together this morning and talk about them. European stocks, let's have a word on that, shall we? Because European stocks, I mean, sort of up a little this morning. Certainly defence stocks doing very well. The higher rates environment certainly being felt when it comes to the banking sector at one end and real estate at the other.
Yeah, those might be some of the individual things moving the markets. And I think, I share your sort of questioning a little bit about whether this should be a good day for equities when there is that political kind of cloud hanging over the market. Once again, yes, on the one hand, a peaceful resolution of the conflict in Ukraine could be seen as a positive by removing some of those overhangs and long-standing risk for the market. But on the other hand, at what cost, right? What is Europe going to have to pay in terms of budget, in terms of, government bond issuance, and in terms of sort of sacrifice in order to make everything work? And also, that bigger picture of what is the US demanding from Europe and how hefty are those demands going to be in terms of those tariffs, in terms of that equalization as well. So a lot for investors to consider. The individual factors, higher yields may benefit banks, defense spending may benefit defense companies, but it still seems like it's uncertain whether this is a net positive or not.
OK, Bloomberg Executive Editor for Asia Markets, Paul Dobson, and we are seeing, of course, that read across to defence stocks this morning, with SAAB near the top of the list, getting 8%, Rheinmetall as well, gaining around 7% across the defence space. You are seeing strong upside.
Yes, and bank stocks are higher on the back of higher yields, but I'll go to some news flow surrounding one of those banks. Well, it brings together two of them, UniCredit and BPM. So UniCredit saying it may terminate its BPM bid if BPM raises its Anima offer. This goes right to the heart of the Italian banking consolidation story. We, of course, have seen UniCredit making an offer for BPM in return making an offer for Anima, and now UniCredit giving us an update on its thinking and where that one goes. I'm going to be speaking to the CEO of the Italian lender Banco BPM. That's coming up in the next hour of programming, in fact very soon, in around 10 minutes time. That is it for the opening trade. European stocks up 0.2%. Substantial moves on European bond markets on the defence story as it continues to develop. We'll watch the news from Paris. This is Bloomberg.